one of the major European oil giants in reset mode. BP, a big name with a long history, but 2025 was not a good year. We had billions in write-downs, buybacks were halted, and there was a quarterly loss. And yet free cash flow is strong, the dividend is stable, and the valuation is currently attractive. So is BP currently an opportunity or a wounded giant? And that's what we're going to look at today, as always, without any marketing spin. BP is one of the major European oil majors headquartered in London, a British super major operating globally in upstream trading, refineries, and gas stations. So it's an integrated company. Let's also take a look at how I'm invested here. In total, I hold 185 shares. My entry price was €4.53. So far, I have already received a net dividend of €46.76, currently up by 18%. The 52-week high and low are between €4 and €6, currently at €5.37. Analysts set a fair target here of €5.50, and Investing Pro sets a target of €7.27. If you also want to use Investing Pro for your fundamental analysis, you can get a 15% discount with my link and support my channel. A pro report has already been created here as well. We can take a look at it now, and now let's continue. What went wrong in 2025? In Q4, we had a loss of $3.4 billion, of which over $4 billion was a write-down, mainly on renewables. That was the old BP narrative. We are going green, we are transforming, and that has cost capital and reduced returns. And now comes the change in strategy. The buybacks have been stopped. The focus is now on reducing debt, cutting costs, maintaining discipline with capex $5.5 to $6.5 billion, and achieving structural cost reductions by 2027. More than $11 billion in asset sales are planned. And this isn't a growth frenzy, this is cleaning up, and that can actually be a positive thing. Now let's move on to the numbers, the fundamentals. We have revenue of around $188 billion, EBITDA of just under $34 billion, and operating cash flow of over $24 billion. A free cash flow yield of 11%, and that's strong. Debt stands at over $70 billion. Not dramatic, but still high enough to warrant caution. Now let's look at the dividend yield, which is currently around 3%, and to be honest, that's not spectacular. Shell is higher, Total is higher, BP is not the cash flow king here. But the dividend has been paid for decades and was stabilized again after COVID. Solid, not aggressive. Now let's move on to the new leadership, namely with the new CEO since the end of 2025. The following signal was sent: less ideology, more returns, more oil and gas, in other words, back to the core business. The goal is 2.3 to 2.5 million barrels per day by 2030. Focus on fast projects, short cycle and capital discipline. And that's important. Now let's move on to the projects and the growth area. Brazil, there have been new discoveries here. Gulf of Mexico and the North Sea. BP is once again focusing more on its core competencies, not on political ESG marketing. And the market likes that. But trust has not yet fully returned. Now let's move on to the topic of UK risk and the windfall tax. And the real issue isn't Brexit, but rather the windfall tax in the UK, a special tax on North Sea profits, and that puts pressure on margins. And that's exactly why many UK stocks are valued more cheaply, and while that's a risk, it's also an opportunity. Now let's move on to the valuation. We have a forward PE ratio of around 13, an EV/EBITDA of under 4, and a fair value significantly above the current price. This is not an overpriced stock, this is a value case with turnaround potential. So what are the risks here? Will the oil price fall? If the UK tightens its tax policy or the strategy doesn't work, then BP will lag behind Shell and Total. So what's the conclusion? BP is not a high yield monster at the moment, but rather a clear growth stock for now. But we have a solid cash flow, a strategic reset, and currently an attractive valuation. For me, it's certainly not an all-in, but it's interesting for a quick addition to the portfolio, which is why I invested when the market was still cheap. If oil prices remain stable, BP can catch up significantly. Now, I'm interested in your opinion. What do you think about BP, or do you see your opportunities elsewhere? If you're not a subscriber yet and you enjoyed the video and don't want to miss anything else, I'd be happy if you subscribed now. Otherwise, feel free to like the video if you enjoyed it. I'm happy about every interaction with you, so feel free to leave a comment. As always, this is not investment advice, but just my personal strategy. I wish you all successful investing. See you in the next video.